Dow. The Dow crosses 50,000 for the first time ever. Here to tell us more is the president of Wilsey Asset Management, Brent Wilsey. Brent, good morning.
Good morning. Good to be here.
Were you surprised at this?
No, not surprised.
But it's never happened before.
Never happened before, but just understanding how investing and finance works, it wasn't a surprise at all. And it is a very important indicator because what it shows you is that the Dow goes up in value because businesses are going up in value. And that's a positive thing for the economy. It means businesses are making more money. Also, too, it shows that investors are confident to invest their money into investments as opposed to hoarding the money and being afraid of what's happening in the future. So this is a very positive indicator for the economy, and it's something that, it may not look big, 50,000, who cares? There's a lot behind that as well. So it's very important to see the Dow hit 50,000. Good indicator.
What's some of the stuff that's behind it? What can we attribute this to?
Well, let's talk about what makes up the Dow. Then we'll talk about the history of the Dow.
Okay.
But what makes up the Dow is there's 30 companies in the Dow, and it's a price-weighted average. So what that means, the higher price stocks get a bigger weight than lower price stocks. The most expensive stock in the Dow right now is Goldman Sachs, about $928. It accounts for, I believe, about, gosh, I lost the number, about 11.4% of the Dow. So it's a big indicator because it's so large. That compared to your Verizon, which is only about $46 a share and accounts for about 0.6% of the Dow. So the bigger companies account for more. But it will adjust itself as better companies do better. Like right now, financials are doing very well. It's the biggest part of the Dow. That shows that people are borrowing money, lending money, investing. I mean, all these important things. So that's how the Dow is made up. It's based on the prices. And I think it's better than the S&P 500 because it's more balanced. The S&P 500 is based on the market value of the company, and you got technology making up like a third of it. It's just ridiculous. The Dow is actually a better indicator, I believe, of the economy.
So each day, one day a week, you guys get together and you just pour over numbers and stuff like that. How much does the Dow hitting 50 affect your choices when it comes to investing?
For us, it doesn't affect us at all because what we tell people is we'll say our own index. We invest in 15 to 16 different companies. The Dow is 30 companies. So what we're looking at is our 15, 16 companies. Now, a couple of our companies are in the Dow, so that's important. But the Dow, and actually a good indicator is this past, well, year to date. Year to date, we were up, I can't tell you the number, but we're up quite a bit when before Friday, the indexes were down. So it's because we don't have the exact same companies as the Dow does or the S&P does. We're looking more of a value investor. We're trying to find companies on sale. Like I will tell you, we like Verizon. Goldman Sachs, we don't like it, too expensive. So it's very important how you understand. That's why I tell people the Dow's an important indicator of the overall economy, but it may not affect your investments.
Okay, do you think it's gonna one day hit 100?
Oh, it will definitely hit 100,000. And, if we go back in the history of time, the Dow came out in 1896, started at 41 points. It was created by Charles Dow. It took 76 years to reach 1,000 points in, 1972. Then it took another 29 years to hit 10,000. That was 1999, I believe, is when it hit 10,000. But it's a compounding effect. And we always talk about the magic of a compounding. So it took, 76 years to hit 1,000, 29 years to hit 10,000, to hit 20,000. That was 2017, so 18 years. But at 40,000, that was hit in 2024, so it took 2 years to hit 50,000. This is because of the compounding that people neglect. That's why we tell people invest early so you do much better. And so now with the Dow, if the Dow earns, to get to 50,000, it was earning about 9% per year. We think over the next 10 to 12 years it will hit 100,000 because we'll have a hiccup, we'll have a recession, we'll have some problems, but the average at 7.2% means we'll hit the Dow 100,000 in about 12 years. And it is kind of funny. When I grew up, my dad, he was a car salesman. He didn't know much about it. Oh, don't invest in stocks, they're too risky. Well, that's when the Dow was trading out 1,000. Darn it, Dad, I wish I would have not listened to it. I wish I would have invested in the Dow because now I've learned about the magic of compounding and how important the Dow Jones Industrial Average is because it shows the economy. And more people invest when things are better, and then they'll buy more, they'll buy homes, they'll go out and buy cars. So it's a good indicator showing positives going forward.
All right, Brent Wilsey, Wilsey Asset Management. Thanks, Brent.
You're welcome.
Thanks for breaking that down for us. Very cool. All right, the FBI is investigating a new